Hi, welcome. It's Michael here. We're going to be diving into the Competitive Edge intelligence briefing for November. So let me just flick my camera over and then join me. And we're going to be going through the competitive deal playbook for the fintech sector. And this is the executive summary. If you want the full report, just click the link in the bio and you can download the full report. But this is just the executive summary. So the way we've compiled this is we've got a range of data sources from verified proposal data, from enterprise buyer feedback, and then also analyst validated pricing benchmarks. And then we've created a massive model in order to create this, which has been really cool. But essentially, in terms of the executive summary, we're going to be going through that. But definitely there is a shift that we're seeing. We're seeing three core shifts. We're seeing, of course, that fintech players are looking on pricing precision. This is the thing that fintech players do the most of. They want to get the bundle absolutely right in order to ensure they're maximizing their overall margin. They're flexing as much as they can in terms of getting revenue through, particularly more mature players. We'll talk about some of the new entrants, and that is different for new entrants. It's a very different model, and there's a reason why. But for the more mature players, it's very much looking at pricing precision, bundle intelligence. But it's essentially three main shifts that we've seen. So the first one is API pricing is shifting from volume-based to value-based models. So good examples of these are players like Plaid and Yapily. They're increasingly structuring pricing tiers around data value and use case sophistication rather than just core raw call volume. Basically, this allows for better monetization of high intent users, and then it also unlocks premium margin. So that's the first thing. The second thing is compliance and KYC are now core to bundled offers. So firms such as Solaris, which are in banking as a service, and ClearBank, which is in banking infrastructure, they've embedded onboarding and AML and also fraud detection as standard components within core packages. Now, that wouldn't have been done before. That would have all been additional value, but those are now being bundled in. And this is driving adoption by reducing vendor coordination burden for some of their B2B partners. And then the third thing we've seen is that funding-linked pricing strategies are emerging. And this is what I referred to earlier, that early stage disruptors who are more pre-seed to Series A, what they're doing is that in order to drive scale very quickly, they're using very aggressive flat rate pricing. And then that way they can build market presence in order to have to get to scale much quicker. But what we're seeing is that more mature players, which are more Series B plus, they're using tiered usage-based schemes, which are tied to product depth and adoption velocity, which is a much more standard model for fintechs. But these are basically the trends we're seeing across the different subsegments. So for payments, we're seeing the common pricing model is a percentage of transaction and tiered. What we're now seeing is that bundle features, so KYC, FX, onboarding. So that level of bundling is going up. On data infrastructure, we're seeing tiered API access. The bundle features are data suite, compliance, and also risk APIs. So that's around value-based scaling. For banking as a service, we're seeing setup and monthly fees as a common model, but then we're also seeing bundles there, which is around KYC, cards, treasury ops, and then the trend direction is having more pre-bundled in terms of compliance aspects, compliance components. For neobanks, we're seeing the common pricing model as flat and usage tiered, but then the bundled features are tax, invoicing, analytics, and then that's really trying to create an all-in-one experience. And then for banking infrastructure, we're seeing volume-linked API charges, and bundled features are payments, direct debit, and also FX. So this is basically around predictive discounting. So I think the key thing here is that fintechs are no longer just competing on price. They're also competing on package depth, trust, and predictability. So that's all we've got time for today. If you want the full copy of November 2025's report, which is this one, just click the link in the bio and download the full report. And as such, I'll speak to you again. All the best. Thanks. Bye.